Hi, welcome to the Market Alert for the last day of January, 31st of Jan 2018. So yesterday in the pound, market soon giving way to the weakness it's seen in the last few days, putting buy signals and driving higher. And one of the reasons for this is this fellow, Steve Mnuchin, former Goldman Sachs boy, who is now the Treasury Secretary for Trump. As he says, they absolutely support a strong dollar over the longer term. And I just love this here where it says, here we go again, because again you've got this rhetoric. And if we have a look at the, there you go, the dollar index, you can see that this is already starting to reverse on the overnight market. Take out this level here, and away we go again to the downside. I thought we'd had a bit more of a consolidation on this, but not to be the case, and the market moving higher, as you can see there, all the way through 150 points yesterday. And also on the overnight market, you can see that this is continuing to move at 141.87. And the daily chart, now we've got the bottom in place, which I was talking about yesterday. We can have a look at drawing in some sort of resistance to the upside, and we've got the 62 and 76% there, 142.57. I'm just going to click on save, and that will hold this here. We saw the market come back and find support at the low of this professional buying bar as well. The low of a professional buying bar is a crucial area. A close below these bars will see the market generally move lower, and obviously the opposite for the selling bars. So a close above 143.45 is required in order to move higher there. So watch the fib retracement area there. And in the really big picture there, in the weekly chart, you can see that we've got a turnaround there, and the market heading towards this 76% retracement as well, 142.71. So make a note of these numbers. They are important resistance areas for this market. News today, well, it's the big one today, isn't it? Trump's already spoken. Let's just go through and see what we've got. That's going to move things. Yellen's the last FOMC meeting. We've got crude oil inventories, but the big one really is at 7 p.m. Now, the live events or releases of the FOMC minutes have not really moved the market, so it's going to be interesting to see what happens this evening when Yellen says her final, or releases the final thoughts of her tenure for the last, I don't know how many years it is now. It seems like she's been here forever, probably a good 5 or 6 years, and how the market's going to react. It may be a case that yesterday's shakeout that we saw in the Dow, if we just go to the daily chart first, you can see there we were down 400 points at one point, and there was some selling around, but the market trying to come back now on the over. And just like the pound, we can do exactly this as well. We can go from the high to the low, put in the 76% retracement there, and see how the market fares should it come back. Also, what we're just talking about with professional buying bars, professional selling bars, you want to see the high taken out if the market is to move higher. And on the intraday one yesterday, well, we didn't get any signals in the first part of the session. We saw some buying coming in. This was met by 2 bouts of selling. The selling disappeared, the market retraced, and we had a 76% retracement, 62.76 there, as you'll see. And then the market moved back down again, which you'll see there, and then it moved back again. So if you do exactly the same from this high down to this low, you'll see the market trading through the 76%. It closes only once in this red bar, which is a sign of weakness, and then the market reverses and moves back to the downside. And in the evening session, you see the market move down once again, but this time finding support and you'll see the opposite in this area here, bang on the 76% retracement, and the market holding there. And on the overnight, well, we've seen the market move up a bit following Trump's State of the Union address. This time last year the market took off like an absolute rocket following his address to Congress. So interesting to see that the market really hasn't gone with this one at all. So yeah, interesting developments here. Like I said before, this isn't going to continue forever. At some point all bubbles burst, and it's very difficult to find the sort of high and say, well, this is it, this is going to be it. But I think there's still, as I said yesterday, I think there's still a bit more on the upside yet, because you've got the new chap coming in, Powell, and that always gives the market a boost. So I don't think it's just yet, but if rates go up again in March at his will be a second month in the job. Well, actually it'll be the first, because Yellen doesn't leave till halfway through February. So after the first live meeting, I think the market will take a view there. And also we're heading for the sell in May, go away as well. So there's a lot to keep the market up. A rally in the bond market. There was a lot of bond buying yesterday, so we'll see. But I don't think it's the end of the up move just yet, is how it's playing out. So have a quick look at the implied volatility. The implied is up, which you'd expect after yesterday, 1284 to 1356. Yeah, it's an interesting one. Are we getting towards the 100%? Say 16 really off this move, but if you go back to the low, 1356 is already there. So depending on which measurement we take or where we go from, we've got this big move here. This is the low, and if it's in place, then it's 1356. But if we're going from here, let me just change that. If we're going from this move where we've had a pullback, then this will take us to around the, say, the before and yesterday 16 area. So an interesting area in both of these at the moment. Depends whether we're coming off here with the big move, the longer term move, or from the correction. Either way, we'll be able to tell from the price action, but there's certainly a 100% increase from the bigger picture that we see here. So we could have a bit of a bottom in place at the moment. Right, and finally let's have a quick look at the crypto world. And so Bitcoin moved lower yesterday on the report that there was a subpoena for Bitfinex or something about it, one of the exchanges. Didn't really look at the detail, but any excuse to mark it down. As I said yesterday, it's likely to go lower. And again, you've got this area here that 76% where the market could come down to as well, which is the 8928 level, and that would certainly also tie in with a double bottom on this bar here, but definitely not up for the time being. I would expect this to remain like this for the next couple of weeks as the market consolidates. I did it for a couple of years in the early days of Bitcoin, but I don't think that'll be the case going forward, obviously because of there's more awareness now of Bitcoin. So we'll see, but like I say, I think this is going to be sideways and consolidate for a bit after such a big move through the fourth quarter of 2017. Right, that'll do it for this one. Keep an eye on Yellen at 7 PM. I would think that the Dow's going to be fairly quiet waiting for her. There's nothing else really out. The crude oil inventories don't make that much of a difference these days either, so just keep that in mind. Right, that's it. If there's anything to report, I'll let you know. Other than that, as ever, thanks for watching. See you in the next one.